London Stock Exchange boss Xavier Rolet has stepped down with immediate effect, blaming unwelcome publicity amid a heated row over his departure. Mr Rolet announced recently that he would step down by December 2018, but the move sparked a division between the group, an activist investor, the Children's Investment Fund Management (TCI), who accused the group's chairman of pushing at Mr Rolet. He has been replaced by Chief Financial Officer David Warren.The, now ex-boss said, "Since the announcement of my future departure on 19 October, there has been a great deal of unwelcome publicity, which has not been helpful to the company. At the request of the board, I have agreed to step down as CEO with immediate effect. I will not be returning to the office of CEO or director under any circumstances." TCI, which owns more than 5% of the LSE, had ordered a shareholder vote for the removal of Mr Brydon and to retain Mr Rolet until 2021. The LSE Group said it believed, and continues to believe, that the previous plan, to hunt for a successor to Mr Rolet for his departure by the end of 2018, was in the best interests of the company. It has now asked TCI to withdraw its demands for a shareholder vote in light of Mr Rolet's decision. Commenting on the LSE's tussle, the Governor of the Bank of England, Mark Carney, said he was mystified. The governor called for urgent clarity and said he can't envisage a circumstance where the CEO stays on beyond the agreed period. Shares in the LSE Group fell 2% after the announcement. Mr Rolet will now be placed on gardening leave for 12 months, during which time he can be consulted by the board, but can bring forward his notice to 4 weeks and instead receive a payment in lieu. Mr Rolet is still eligible for an annual bonus valued at up to 225% of his salary for 2017, as well as share awards under the long-term incentive scheme. Mr Warren will be paid a salary of £700,000 in the role of interim chief executive, up from £488,000 in his previous role. Mr Brydon, commenting on the furore, said, "The board is confident LSE Group will continue to prosper with David Warren as interim CEO and the existing strong management team." On Mr Brydon's decision not to stand for re-election at the group's next annual general meeting, the LSE said he and the board believe that at that point it would be in shareholders' interests to have a new team at the helm to steer the future progress of the company. Mr Rolet had been London Stock Exchange Group boss for 8 years, during which time the LSE has seen its stock market value soar from £800 million to nearly £14 billion. Following last month's announcement of his departure plans, TCI investment manager Christopher Hohn wrote to Mr Brydon, accusing him of offering poor explanations for Mr Rolet's departure and claiming that confidentiality agreements were barring full disclosure of his plans. The fund had been urging Mr Brydon to resign on his own terms, for Mr Rolet's contract to be extended, and for the group to suspend the search for his successor.